Joining me now is Bloomberg LP senior economist Joe Brusuelas. Joe, what can you tell us?
Well, I think what we've got here is, the negative interaction effects of both Sandy and the looming fiscal cliff. While financial markets are on the move today, clearly in this Beige book, that's on the minds of real economy participants. Specifically, what were the rebuilding costs of Sandy going to costs, and then what is the hit we're going to take from the fiscal cliff if policymakers don't get it together.
This was not a bullish report, was it?
No, it wasn't. It wasn't a bullish report. Moreover, it showed that decline in manufacturing that we've seen since really the middle part of the year, and that decline in core durable goods orders, I'm sure, is beginning to, the lack of activity is beginning to percolate throughout the manufacturing sector.
Some positive news, correct?
Sure. What we know. The real estate markets, the residential real estate market in particular, prices have stabilized in many areas, and the real good news is we're starting to see price appreciation in those areas that were the most hard hit, specifically places like Phoenix and Miami and Las Vegas. Even Las Vegas is starting to see price appreciation.
Joe, when does the fiscal cliff start to throw this into flux? This is the last Beige book of 2012.
Okay, well, a couple things is, I think big manufacturers, the big companies have already started to take, action. Clearly, we've talked to enough large firms that they have a plan B. What I'm concerned about is the public. The public has been quite quiescent about the risk to the cliff. Perhaps it got lost in the cacophony around the presidential election.
Sure.
Perhaps they just think, well, we've gone through this before so many times, they'll get it solved. What I worry about is when your median consumer gets the check on December 15th and they get a note saying their after-tax income is going to go down next year. Perhaps they don't spend in that last sprint to the holidays the way we normally see, and that could hurt retailers.
It doesn't look like the Fed has any plans to curtail that $40 billion in monthly mortgage-backed securities, does it?
No, that's going to be with us for a long period of time. When the Fed meets on December 12th, I expect them to announce that Operation Twist is ending, but they're going to restart Treasury purchase programs in order to facilitate easier financial conditions, but they'll also say to partially mitigate any likely problems that are associated with the cliff.
And Joe, just quickly, FOMC meeting again in 2 weeks on December 11th and 12th. What are you expecting?
Well, that's exactly what they're going to do. The Fed's going to begin purchasing treasuries again.
All right. Bloomberg LP senior economist Joe Brusuelas is joining us. Joe, thanks so much.